Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to the show, Mark.
Glad to be here, Jim. Thanks for having me.
Mark, according to government figures in Canada, Ottawa is running about a $3 billion surplus for the first quarter of the year. What's the state of your budget and finances in the U.S.?
Okay, well, I don't have the number, but we're significantly in a deficit situation here and spending like drunken sailors. So what you're reporting in Canada is envious from my point of view, and now we're dealing with a possible shutdown down here, which is not new for the U.S. So I think Canadians have their act together more than Congress here in the U.S. But the one here is a little different because the policy issue is it's not like the Obamacare issue or the wall issue, which we've had here in previous administrations. It's about the way the entire government finances itself and the ways of spending, to bring us into some fiscal sanity. The biggest issues, are, I guess, welfare and, all the kinds of extra items that are added to the bills. The way it usually is set up or should be set up, September 30th, of course, is the important date, and the question is whether they're going to issue some type of continuing resolution. But normally each department is supposed to submit a spending plan and all in regular order, and instead it ultimately comes down to a one big giant budget called an omnibus bill, which really forces everybody to agree, even though they don't agree to pieces, because nobody can agree to all the specifics. The question is, if we have it, are we going to have a continuing resolution, or is it going to be a shutdown? And it could last longer than the Trump matter, which I think was 35 days, and it was a war between Trump and Pelosi. He wanted the wall; she wouldn't give him the wall. I guess investors should hope for the best but prepare for the worst, because if they really, shut things down, it could get a bit nasty. I think, even Jamie Dimon is out there talking not only about this situation, but about, the risks near term with high interest rates, the Ukrainian war. Who knows what's going on with China? The interest rate scenario is a significant one. So there's a lot of stuff here that we might have to hunker down here a little bit, and everybody could say, well, just fight like we always see, and then ultimately they just spend the money, and maybe that will be the case, but it could possibly be nastier this time. And we have Republicans that are not really Republicans, the so-called rhinos, and there's discussion that the Senate may try to create its own spending package and force it upon the House here. I know McCarthy, the House leader, he's trying to, create a more sensible bill, but even so, on the Republican side in the House, there's those that are against him and don't think he's doing a good job. It's such a mess. But even without that, the fact that the Fed is out there raising the rates, everybody's thinking they're going to come down next year, which may not be the case. I still remember 20% interest rates back with Paul Volcker back in 1980. You have no idea what's going to happen. Again, if there's a military action, in fact, we recommended in my newsletter today a bunch of defense stocks. I really feel, the war risk is there. and not only because of Ukraine and Europe, but because of China, and there's just so many things going on in the world right now. It just I'm just not that much of an optimist, but we'll follow the market and make a judgment accordingly.
So, in a situation like this, how are you handling your portfolio?
Well, I'm defensive as you possibly could be. I think you need to be, in defensive plays. Precious metals, real estate, uranium, things that we really need. Food products, ETFs that follow food, or just like physical real estate and gold. Try to keep a low exposure. Of course, we've been trading the short side too, and doing pretty good on and off here for the last 6 months. We just keep playing short plays along the way. We actually were short gold and silver via inverse ETFs in and out. We just covered yesterday a day early because they were down again a little bit today, but trying to hedge a little bit even on the gold side because we want to protect your positions. But it just too much optimism out there about the future, that things are going to be okay. We'll just spend our way out of it, and Fed will cooperate, and rates will come down, and the economy is booming. But the whole rally in the stock market was a phony rally. It was basically 7 stocks, the Magnificent Seven, that took the market up. And if you look at the Russell 3000, which I think encompasses 85% of all the investable stocks out there, about a third of those were actually down for the year, even though the S&P, showed some modest gains and other indexes. So most of the stocks really didn't participate, and it was a camouflage of what was really happening. It was, in my belief, manipulated. Market doesn't want to talk about this. Commentators don't want to talk about it, but there's an element of manipulation here when 7 stocks really mask the weakness of the rest of the market. You've got the government out there, and I post this in my letter every day, reminding everyone about it, but nobody even talks about it in the press. I listen to the press all day long. The plunge protection team is out there that Ronald Reagan created. There's the Exchange Stabilization Fund that actually protects the Fed, and part of that is there's a Treasury Department provision called the Gold Reserve Act of 1934, where they can go and play with the metals market and the regular market. And I think, it wouldn't surprise me if the rally in the Magnificent Seven was government-sponsored on a certain level to cover and mask what's really going on elsewhere. Most companies really didn't do well this past year. As I said, there's a big percentage were down for the year despite what we saw in the major indices. So, of course, we have the election next year, Jim, and, you could say, well, the plunge protection team and the government will get in there as they do in Japan, and they own a lot of stocks and ETFs, and they'll just play with the markets, and I guess that could happen. It's really dangerous out there, and even people that owned Apple Computer. Of course, if you owned it from the time it went public in the mid-1980s, actually I bought it at the IPO back in 1985, but I obviously never stuck with it. I think it was up like 15,000% or some incredible number if you held it all these years. But even the people that owned Apple this year, saw it come off and have a nice sell-off here in the last month or so. So, nothing is impervious, but I think you have to be careful. The only thing that I suppose you could look at is that even the cyclical forces say, September, October tend to be weak. We're in that period now. Maybe we'll come out of it and have a manipulated year-end rally of some kind and make everybody feel better for the Santa Claus rally and the Thanksgiving period, which often happens. And we'll just try to trade up. The last few days, it was interesting what's going on just now. We had what I call a turnaround Tuesday, which is often in the market where the market reverses direction, and sure enough, it kicked in, and the market, reversed sharply when it was least expected. We're at the end of the month seasonality period. They call it window dressing in the last couple of days of the year, where managers come in and they try to buy stocks and make their portfolio look good. We have the full moon on the 29th, which is tomorrow, and the market is, sort of changing direction here a little bit around the full moon, which is not unexpected. So we had a little bit of a bounce. And Friday, tomorrow, is the last trading day of September, so that gives the money managers time to adjust their portfolios. So, a lot of interesting, twists here. And, remember I kept telling us, our listeners and my subscribers, about the fall solstice, the due on the 22nd, 23rd, and it could possibly be coincident with a market low. And sure enough, that was the case, which is a seasonality factor, which again nobody talks about. They're afraid to be thought of as quacks and astrologers or something. It's geocosmic. It has nothing to do with that at all. So a lot, on a very short-term basis, that's interesting stuff that's happened the last few days. So if the market follows traditional, quote-unquote, traditional patterns, I guess you bottom out this time of year and then you get some type of rally. But I'm just wondering how that's going to happen with the budget dispute and with interest rates continuing to go higher, and the stories out there about home ownership becoming more and more difficult for people, with some rates approaching 8%, where it was 2.5% a year ago. So it's interesting times, and honestly, I'd be out of the market until it's really clear. I mean, I'd rather, even though I don't trust government debt, and it's in the dollar in the U.S. of the last standing horse in the glue factory, as the expression goes. If you get 5.5% on a T-bill, I think you're a lot safer, unless you're nimble trading day to day in the market. But I think it's still a treacherous time, and I'm wondering, if we get this year-end rally, whether next year is going to be as good as the bulls are telling us, because of their hope and expectation that the Fed's going to cooperate and lower rates. In fact, history actually says, I read this somewhere in the last couple of years, is that historically, when the Fed actually reduces interest rates, the market actually collapses, because their reaction to reducing interest rates was some type of external outlier or catastrophic event, and they had to bring the rates down to hopefully save the economy or the market. But that action alone is a trigger that things are bad, and the market collapses and doesn't immediately go higher as the bulls would anticipate, just in their general conversations that you're hearing on the street now. So I'm just, I wonder if that's going to play out, that when the rates start to come down, it's for a reason that we don't want to talk about, that it's a real negative occurrence of some kind. So it's really interesting how history repeats itself in different ways, and it'll just be really interesting how it all plays out. So probably the most unexpected scenario is that they lower rates, the stock market collapses, or rates go up to 20% or something incredible that nobody would ever think is possible, and or we experience some type of military or geopolitical event that's really serious, or even a geocosmic event of some kind. We have active volcanoes on the planet. We've got all kinds of fun stuff that could really raise the temperature of risk here. So the best you can do is, I suppose, try to stay optimistic in the best way you can. But owning precious metals, even though they seem to be in a little downtrend right now, is going to not last forever, and physical assets, and try to keep money at as close to zero risk as you can, and treasury bills and stuff, to me, still makes a lot of sense.
We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, do we have a special offer for our listeners this week?
I sure do. Let's do it. If you want to try our newsletters, and there's a bunch of them up there, including a cannabis letter. Cannabis seems to be getting a lot of attention now because of the possible change of laws here in the U.S. That's one of many products we have, including our precious metals, metal resource letter, and our market timing letter, and so forth. So it's 2022 half off. 2022 half off is the promo code. You get 50% off, and you go to VR Trader, Victor Robert, VRTrader.com. Also, I didn't disclose that I'm not a financial advisor, nor do I provide financial advice. We just do our newsletters, and want to make that disclaimer.
What's going on with uranium? It seems to be pretty hot right now.
Yeah, I mean, that's it. For years, there's been a lot of talk about why it wasn't rallying. It had a big push a few years ago, then it died, and I can't put my finger on it. I mean, we need uranium to save the planet, honestly. Our energy sources are diminishing. We don't generate enough, at least here in the Western Hemisphere, the fossil fuels that we really need to. The government here in the U.S. restricted a lot of that. Prices are going up. Saudi Arabia is jacking prices up. Russia wants to see prices go up. The world seems to be conspiring against us in that sense, in terms of controlling the energy markets. But we really don't have the energy that we really need, particularly with all this talk and nonsense about everybody owning electric vehicles and so forth. So you think that we're building a bunch of nuclear plants and we need the uranium, but we're really not building those plants. I think there's a new one in Georgia just recently. It takes about 10 years to get a plant underway. So I'm just wondering where it's all going. Is it going into space for a space program? Is the military just building more uranium battleships and submarines and other vehicles that require the internal nuclear plants on those ships? Where is that demand, coming from? So, you can't say we're building 50 nuclear plants all over North America, and obviously we need more uranium. So is it coming from foreign sources that are demanding it? I mean, I've been unable to pinpoint why uranium is going up, though we all know we need it, and we do need more nuclear in our lives. So it's an interesting question, because again, as I mentioned a moment ago, for years uranium was stagnated, and it really did rally, and we were in almost the same type of situation, and there's still a lot of public apprehension about nuclear. So, again, it's not the nuclear plants unless the nuclear plants around the world are demanding it, China and Africa and other India, and they're demanding the uranium, and that's driving it up because they're getting more proactive in that area. So it'd be interesting if we can pinpoint where the uranium flows are really going and why prices have soared.
What's going on the crypto front?
It's dilly-dallying here a little bit, but I like it. I mean, you've got the Banking Act coming out of the Senate, and there's some discussion about how far it should go or it's not going. They basically want to legalize the banking of cannabis here in the U.S., where you can go and open bank accounts and do credit cards and not be restricted. The IRS has got these, Internal Revenue Service has got these restrictions that you can't deduct any expenses because it's an illegal activity, and therefore you can't you pay taxes even though you have expenses. So I'm hoping the Banking Act covers that too. I'm not sure. That should be part of it. Just crazy stuff going on. And then on some other legislation, you've got the department, the DEA talking about rescheduling cannabis marijuana from a 1 down to a 3 category, which puts it into some normal categories like aspirin and so forth. So the two separate things moving parallel in the U.S. government here, and the net result should be higher cannabis prices because it's less restrictive on the businesses in that industry. There's still people that buy the stuff. Of course, the black market is always out there, which concerns everybody, that you can stand outside the door of some of these places and buy it cheaper than inside the stores. But there are companies here in the U.S., unlike some of the Canadian companies that were really famous, like Tilray and Canopy Growth, that just fell on their face completely and their stocks collapsed. There's a bunch of companies here in the U.S. that we list in our newsletter, that are actually making money and buying back their own stock. So some of them are able to profit here, and I think their ability to make money would be better if the cannabis is rescheduled, so there's less stigma about it, and the Banking Act is approved where they can do business like normal businesses. So I have to be more optimistic about cannabis stocks. Now, whether they're going to take off really big or not, but they're so depressed, I think there's a trade there, and I put them on my list because, stuff that really, is way up there is really in the cellar, and there were some signs of buying activity because of these news stories. So, it's the old vice story. I mean, there's always demands for vice, gambling, alcohol, cannabis. You can go down the list. I mean, there's always demand for these type of products, and with some of these stocks so depressed, you would think that there would be, some opportunity. In fact, Tilray, recently we mentioned this. It's in the news. They recently purchased some beer assets from Anheuser-Busch to diversify their portfolio away from strictly cannabis. And before that, they said they were going to use some inactive farming activity to grow regular vegetables, not only cannabis. So, I mean, they're trying to turn that company around. The stock really hasn't done that well. It's bounced a little bit, but there is effort out there to turn the industry. So I may be making more of a discussion than I should about it, but you asked the question. It is of interest to me, and they are tradable.
Mark, anything else we got to keep a close eye on right now?
There's not much in the geocosmic. I can't see much coming out of the sun on the flares. They seem to be little things popping around there, so I'm not too worried about that. And I don't see any asteroids heading our way this week. So I think you got to worry about the danger in Congress and at the Federal Reserve and China and Ukraine and that kind of stuff, and see if those unfold here a little bit. So I would be just a little cautious here until we get some confirmation that the market is bottoming and some of these areas are resolved. But I would be defensive for the time being.
Mark, thank you so much for chatting with us.
Always fun. Thank you.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. If you have any questions for Mark, you can send them to info@howstreet.com. That counts for any of our guests, really. Our YouTube channel is Talk Digital Network. Find us on X @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.